This conference will now be recorded.
Good morning, and today's session is how to discuss, illustrate, and apply for National General Short-Term Medical Insurance 12-month plans. We find it to be a little bit on the easy side. If you are in the health market, particularly Medicare, the question we're asking is, why are you not doing it? Is healthcare sales that confusing? And then we're going to talk about how it's important to bundle products to minimize the risk for the clients. Just a few disclaimers. Go over this in every course. Just spend a second or two and go through them. Anything you want to re-review, you can just move the module back and do pause. So who is short-term medical health insurance suitable for? And again, although this is not the rule, this is more of a guideline. But first and foremost, it would be suitable for anyone who can pass the medical underwriting questions. Okay, there's going to be several questions that the insurance companies will ask. This is not health insurance based on your income. This is health insurance based on your health. So I'll talk a little bit about that in just a second. Number two, somebody who makes too much money and there is no financial assistance available for them through healthcare.gov. So what do I mean by that? If you're sitting with a prospect and that prospect is on a very limited income, and you run the calculator on healthcare.gov and it appears that they're going to get a $200 or $300 premium subsidy, this is not the product that you want to offer to them. This is not in their best interest. It would be in their best interest to pick up a health plan from the exchange. Number three, somebody who is not a heavy utilizer of healthcare. Why? Because chances are, if somebody's a utilizer of healthcare, they're not going to be able to get through the medical underwriting for short-term health. Also, short-term health has a clause in it, and the clause states that they do not cover anything of a pre-existing condition, typically for 12 months back. So if you have somebody that's a heavy utilizer and they're constantly going to doctors for something, let's say uncontrolled high blood pressure, for example, those visits and any type of things that happen medically to them as a result of that condition isn't going to be covered by short-term health care. So it's very important that when you're determining whether or not your client is suitable, if they are a heavy utilizer of healthcare, you got to send them down to the exchange. This will not work for them. Somebody who is mindful to understand network repricing. Okay, what does that mean? That means that typically short-term health care plans, they do not pay for doctor's visits. Okay, I'm going to be careful with my language. They do not pay for doctor's visits. However, that doctor has contracted with that health plan's network, and that doctor has agreed to perform services at a pre-negotiated price. So doctors have two prices. They have a cash price, and they have the price that they've agreed to if you walk in the door with an insurance card. They're usually very different. The cash price is usually 4 times to 6 times more than the repricing amount. So when the person is mindful to understand network repricing, they will be mindful to understand that this insurance would be in their best interest. Somebody that is willing to pay out of pocket for everyday medical costs. Everyday medical costs are your physical, blood work, when you're sick through the year and you got to go visit the doctor or an urgent care, people that are on maintenance medications, people that are willing to pay for these everyday expenses at a substantial reduction out of pocket. In exchange, what they're trading off, because they're willing to pay for these, they're trading off very low monthly health insurance premiums. And then finally, somebody who sees the value in health insurance, but for a variety of different reasons, they just cannot afford the very high premiums on the exchange. So what we're going to do is we're going to take a look at an example, and we're going to use myself as an example, and we're going to look at the pricing on the exchange, and then we're going to look at the pricing versus short-term health care, and then we're going to compare the two.
This
Okay,
conference will now be
so here we
recorded.
are. What I did was I put in our information. The website that we like to use the best is called healthsherpa.com. It's a same platform as healthcare.gov. It posts to healthcare.gov. It's just an easier, user-friendly platform to use. I put in my particular information, husband, wife, and 1 child, and I sorted the plans by lowest premium. Okay, I've sorted them by lowest premium. And in our area, the lowest plan premium is $872 a month. That's for 2 adults and 1 child, non-tobacco, $872 a month. And this plan has a deductible of $15,800. So $15,800. So what that means is that we would have to hit that deductible before the health insurance plan pays one single dollar towards any of our medical costs, anything other than a physical. Doctor visit, blood work, emergency room, hospital overnight stay, surgery, doesn't matter. Other than a physical is $150 cash, just so everyone knows. But other than a physical, we would have to pay $26,264, $15,800 for the deductible, $10,464 for the premiums, $872 times 12, before the insurance company pays a single dollar towards our health insurance bills. A single dollar. So you may say, well, you know what? I don't want a plan like that. I'd rather have a plan with copays because we have some doctor visits that we go to. So the next least expensive plan that has copays on the exchange has a $12,800 deductible, $12,800, and the premiums are $971. So now I'm paying $11,562 in premiums. I'm at risk for a $12,800 deductible, family deductible, a $15,800 maximum out of pocket. But look, I get some beautiful copays. Every time I see a doctor, I pay $35. And then every time I see a specialist, I have to meet the deductible first, and then the copayment will be $80. Not real attractive. So you know what? Maybe I'd go to the next one at $1,023. So my cost for the whole year is $12,276 in healthcare, but I got to meet a $13,300 deductible, $15,800 max. But I get doctor visits at $35 and $75. So when you got clients that say to you, well, you know, I want a health plan that covers my doctors. Well, how many doctors do you go to a year? Well, I go for my physical and maybe one other. Okay, great. Here you go, $1,023, and when you go see your doctor, it's going to cost you $35. Are you ready to sign up? So it's a very, very, very expensive proposition to go to healthcare.gov, to go to the exchange. And again, if the person is healthy, if the person doesn't get a financial subsidy, if the person is not riddled with sickness where they're uninsurable or they're going to be a heavy utilizer, you're going to want to look at short-term health. So I'm going to come back in a second with short-term health.
This conference will now be recorded.
All right, so now we are back, and we're going to take a look at short-term health. And the insurance company that this is discussing is National General. And one of the things with National General, I should pull it up right now while we have it on conversation points, is that it utilizes the network of the Aetna PPO. So we'll take a look to see how we can access that network when it's time to look at doctors. Let me just pull the brochure really quick. It's got some major points to it. It offers telemedicine where you can speak with a doctor over the telephone. It does have coverage for doctor visits, but it is subject to the deductible and the coinsurance. You would have access to urgent care. Urgent care would be a $50 copayment per visit. You would have access to the emergency room, ambulance services, and virtually everything else. It utilizes the Aetna Choice PPO network, okay, which is a national network. So I'll get into the nitty-gritty in just a second. I just wanted to just kind of bring that up. And first thing we're going to start is putting in the information for a quote. Okay. Just bear with me one second.
This conference will now be recorded.
Okay, so here we are. All right, so I'm just going to put in our information. Okay, so 3 adults. We're going to look at starting this in January, a period for 12 months. Okay, this is really good for people that are approaching Medicare eligibility. You can do it for how many months it is for them to be turning 65. And you can do a monthly payment or a single payment. So I'm going to just show you what the monthly payment looks like. So instantaneously, when you get to the quote, it kind of brings you to an area where they make a quick recommendation. What I like to do is I like to offer two different options, but we're going to spend time on this one particular option for a second. So one of the options that I always like to recommend is a $5,000 deductible and 100% coinsurance. What does that mean? That means that once I meet the deductible for $5,000, the health insurance plan will come in and pay all the bills on this particular policy. And the cap on the policy is $1 million. Going back to the scenario over here for the family plan, I would have to pay $872 to have the similar type of plan where I would have to pay a triple deductible, $15,800, where I would have to pay that first before the health insurance plan kicks in. So to kind of do an apple-to-apple comparison, when you look at the premium of $478.31, and again, that's for the family, plus the $5,000 deductible, my annual exposure just went from $26,000 down to $10,000. I'm going to repeat that. My annual exposure just went down from $26,000 down to $10,000. I couldn't even think of a reason other than I would get a subsidy, which I'm not eligible for. Are we heavy utilizers, which we're not? Are we have sickness and conditions and illnesses, which we don't? There is no reason for myself and my family to not choose short-term health. There is absolutely no reason, okay? Because it would cost me triple to pick the worst plan, the least rich in benefits plan on the exchange. It would cost me triple to do that. So here it makes complete sense to me. The second thing that pops up automatically is something that you want to always include with all of your sales. And this is what we call the gap insurance. And this here has three components to it: accident and medical expense. Well, this one doesn't have the critical illness, but we want to include that. Critical illness and then hospitalization, okay? So in the event that we were hospitalized for any reason, in the event that we needed medical attention for an accident, or in the event that we were struck with a critical illness, main three categories is cancer, heart attack, or stroke. The add-on or the gap plan, this small gap plan for $60 a month, would pay $5,000 to us. We would then take that $5,000 and we would pay our deductible. So when we pair the plan with deductible insurance, we are then further limiting our exposure, our financial exposure. So what I do is I go into the customization, and I always like to show two examples. The first example I like to show is the $5,000 deductible, 100%, and the second example I like to show is the $2,500 deductible at 100%. So I'm going to add that, and I like to give the client the choice, and then share with them why I think one is superior over the other. So the next thing I want to do, I want to go up here to the accident section, and I want to find the plan enhancer that has a $5,000 payout, but also includes all three components. It includes the cancer, heart attack, and stroke, the hospitalization, and then it also includes the accident medical expense. So I think I just passed by it real quick. It always takes a minute. Here it is right here. Here's the $5,000 one. You want the one with all three, 8184. So I'm going to add that in, and then I'm going to find the one for 2500, which is right here for all three, and then I'm going to add that in. So what I'm going to do is while I'm on the phone with the client, or whether I'm sitting down with them or not, I'm going to add the two packages up together. I'm going to add the $5,000 deductible package, which is $478.31, plus the gap plan of $81.84. So I'm going to give them one quote, which is $560.15. And then the second quote I'm going to give them is the $2,500 quote of $739.72. plus the $46.93, $786.65. I'm also going to quote them dental. They give you the dental right there. You can also change around the dental plan a little bit. If you feel that might be a little too much, there's basic plans, there's intermediate plans, there's PPO network plans. Essentials would be more basic. Enhanced would have a little bit more robust of coverage. You may want to just say, you know what, I'm just going to go with the mid-range one and kind of include that and so forth. So you would add that price in to each of the different quotes, and you would quote the client as a full price. You would quote them for the $2,500 deductible plan would be $903.71, and then for the $5,000 deductible plan, it would be $677.21. And then you would just explain to them, you know, with the deductible plans, you have to meet that deductible first before the health insurance plan comes in and starts paying the bills. However, if you buy the GAP plan, which we're highly recommending that you do, as far as a hospitalization is concerned, as far as any type of accident that would happen to you where you would seek medical attention, and as far as any type of critical illness, primarily cancer, heart, and stroke, any of those type of things would trigger $2,500 or $5,000, which would then pay the deductible. So the only things that you would be spending out of pocket would be your everyday healthcare expenses. So when you go see your doctors, you're going to get a repricing, and that cost that you spend towards the doctor is going to apply towards the deductible. For some people, they rather spend $903 a month and have the luxury of knowing that they only got to meet a $2,500 deductible for the year. Other people would rather save the monthly money, which in this case, the price difference is approximately $226 a month, or coincidentally, $2,718 a year. It's more than the additional $2,500. But some people would rather save the monthly expense and then just kind of take the chance that if they were to reach the deductible, then they would have to come out of pocket. So what I would do in this example, even though it is me, I would make the recommendation of the $677.21. So that would be the plan for the $5,000 deductible. So we're going to get rid of that one. The dental plan for $117.06, and then the plan enhancer that would cover the $5,000. This would be what I would quote the person. I would compare it over to here. You know, you can pay $872 with a $15,000 deductible, or you can pay $656 with a $5,000 deductible and deductible coverage and gap coverage and dental coverage. Mr. or Mrs. Client, which do you feel would be better for your family? It's literally that simple. So then when it's time to enroll, you would click the Enroll Now button and then just follow through with the application. They take Visa, MasterCard, and then banking. Now, I'm going to pause for a second, and I'm going to bring up the provider directory to show you how to find doctors.
This conference will now be recorded.
Okay. So you're in the provider directory. This will be available in our Facebook group. So we're going to use my provider directory. It's just a little bit easier to do that. And remember, it's the Aetna Open Choice PPO. So let me pull up that brochure. I hope I didn't close out on it. Here it is. Aetna Open Choice PPO Network. So Aetna Open Choice PPO Network. Open Choice PPO. Okay, so we want to search for a doctor, and I honestly forget how to spell my doctor's name. And there he is. There's my doctor in network in the Aetna Choice PPO. So if I was the client and you were presenting this to me, you would confirm that my doctor was in the network. It doesn't mean that you can't see any doctor. It just means that when you work with doctors in the network, the client or the customer would get a repricing. They would get the network discount. So you would absolutely want to go see doctors in the network. It makes the most sense. If you don't, you would just pay their fees. Their fees would count towards your deductible. You just would pay lesser fees if the doctor's in the network. So in this particular example, if I was the client, this would be a wonderful, great recommendation. You would be doing the right thing by the client. You would be saving the client a tremendous amount of money. And the best part is there's no federal mandate next year to having minimal essential health insurance coverage. So they wouldn't even be penalized. So everybody wins in this situation. Everybody wins in this situation. So to enroll, you just click the Enroll Now button. Obviously, you need a email. So it's asking for, and then you just kind of go in, type in all their information. There's a couple of medical questions that they have to answer. HIV, diabetes. I'll post those medical questions up in the group that we're in so that you can see. You always want to have those medical questions very handy. But that's the nitty-gritty of it. I tell people to just kind of keep it simple. There's a lot of different ways you can go with the health plan. Okay, there's a lot of different ways as far as the health plan is concerned. But I would just keep it simple. Keep the $5,000 deductible quote, the $2,500 deductible quote, and you don't really have to get too complicated from there. So that's just an opinion. Obviously, if you want to do it differently, that would be for you. So that concludes this module. I tried to keep it quick. If you are part of our network already, feel free to reach out to us for any additional questions or training. If you're not part of the network, please let us know. We can entertain a call to see if you're a good fit. And then if there's any insurance carriers or products here that you have seen that you'd like to know more about, please let me know and we can see if this fits into your product portfolio. And that's how you get in touch with me, Joe Tritola, nationcareservices@gmail.com, and you can call or text me at 561-276-3280.